good morning, Monday morning, 4/13/2020. In most economies, we'd have tax day coming up here in a couple of days, but that was pushed out. Welcome out to the first day of the week here, trading wise, and on our halftime report presented by Tackle Trading. We've got Coach Cody out there doing the screen share, running the charts here today for us, and always doing the production and trying to keep me sane, Cody. I always appreciate that, by the way. I really, really do.
Someone's got to do it.
Somebody's got to do it. It's a tough job. There's no doubt about it. And then Coach Mark out there in pacing land right now, ready to go on a couple of epic rants. I'm kind of feeling it today, Cody. Do you feel that too?
Oh, yeah. Mark's definitely prepared for a rant or two.
He's wound up. I like
Listen,
it.
I'm ready to take on Timmy the Bear.
Like
I woke up and I'm like, I want some of that Timmy the Bear today. I want to take him on. So, Tim, why is the world going to end today? That is my question to you. I'm not even going to give you
it's
the
not.
chance.
I've never made the argument, and it's not. It's not going to end today.
You know,
it's not going to end next month. It's not going to end in 6 months, and it's not going to end in 2 years. We're gonna get through all this, Mark. So that's not Timmy the Bear's argument.
Timmy the Bear. Well, we'll get to that. All right, do your thing. But I'm just not giving you the chance to do your fake salutations anymore. I'm going right at Timmy the Bear right off the start.
Cody, we should keep a running count on how many days Mark actually fights the salutations versus when he actually accepts them, because his mood goes up and down on that. Mark, how are you?
Someday he'll actually answer.
Yeah.
Feeling good, brother? I'm doing freaking great. I am. Right. Not that anybody cares, but I'm still doing great.
I think we all care. There's no
other than, listen, I'm like everyone else. Like, I want to go back and do the things that I want to do in life. It's frustrating. I'm so damn tired of Netflix. I can't even take it anymore.
So I got to switch it up. You got to go some Amazon Prime, some Hulu, some Disney Plus. You got to mix it up a little bit.
That's when you'll know society is returning back to normal, is when Netflix subscriptions start going down again. Domestically.
Break out the old Xbox, PlayStation. Play some of that a little bit.
Was it Emerson who wrote Walden's Pond?
Oh, you liberal, Emerson. John Wayne said, "Stick it up your ass." The Bear.
All I was going to say is, in the 19th century, people would beg for the opportunity to go live in a cabin, get away from society, be able to read a book and write for a couple of months. And today we're all whining and complaining after about 30 days. It is pretty telling in my.
So what you're saying is we need to have a little perspective.
Yeah. I mean, there were generations we asked in this country for people to go to war, go and fight for the country. We're asking you to stay home and stay socially distanced. I mean, come on, guys, I get it. And I do want to have the economy reopen back up. I want to see everybody thriving and succeeding and all that kind of stuff. But let's take it one day at a time. And no, Mark, the world is not ending today. But let's break the news down. Let's break down the charts as well. Cody, give me a quick rundown on what you're seeing on the daily and the weekly chart, as well as the intraday here. Little red inside candle. And then I'm going to get Mark's take on what's happening.
Honestly, I'm seeing kind of exactly what we talked about last week, is that this thing could very easily retrace back to 2,600. And we're getting a little red candle today. Nothing in this chart changes my opinion, because it could be another down day tomorrow. It could be another down day on Wednesday. It could do one down day today and then an up day tomorrow to 2,900. This is just a play what the market's giving you. And my perspective on the market has not changed from last week to this week, because the chart hasn't changed. Mm-hmm. If the chart were to break out of this wedge type pattern one way or the other that we drew this last week, then my opinion would change. If we get a breakdown, out of this wedge, we get a break below that 20 period moving average, then, I'm going to go a little bit more bullish on the market. We get a break probably above the 200 is when I'm going to start going a little bit more bullish on the market. Right now, we're not sure if we're in recovery territory. We're not sure if we're just in bearish retracement territory. The perspective on the market really hasn't changed that much since last week. You look at the weekly chart, and this more than likely looks like a bearish retracement, but it's got to get past the 200 weekly moving average. So there's a lot of things in here that are, in Mark's words, pinching the market, where it's going to break one way or the other. But until that happens, what do? You prepare. You wait for the trade setups. You look for individual setups. You look for individual companies that have better charts than what the market overall does.
Mm-hmm. Some of the best signals that I've seen in the last 2, 3 weeks, Mark, have been on intraday charts, and I actually think technicals are really working on a micro time frame. I know that many days it feels like the technicals don't mean anything. Some days it feels like the technicals are everything. What are you looking at from a charting perspective right now? Because when those moving average signals happen on the 5 or the 15 or the 60, they've been strong on a day trading basis. The relationships here between pivots, I know a lot of traders pay attention to that. Moving averages in the past have been very strong. In your opinion, do technicals matter right now as much? And how are you reading charts right now?
I think technicals on daily charts are becoming more and more important. I think, I mean, what you have in a big picture is you have bulls saying one day things are going to be good, and you have bears saying, like Timmy the Bear saying, we're all going to be in bread lines in America and around the world down the road. But they're both these big, huge, happen one day arguments.
Mm-hmm.
There's going to be very few impactful headlines. Now, could that change? I guess things can happen in this ongoing news story, but the chances of huge impactful where people become ultra euphoric or ultra bearish that extend beyond the day's headlines, not as likely right now, because both arguments are one day things are going to be good, one day things are going to be bad. And so in this type of environment where there are these futuristic arguments, technical analysis is going to take over more and more, especially in these broader schemes. Like when you broke, look at just how price behaved with the 20-day moving average. You know, came up, held, break, rally in this pocket of clear air. You're going to see these things set up over the course of weeks and months, and you're going to see situations where just from a technical basis, it's a really good trading signal, sometimes to the upside, sometimes to the downside. So I think technical analysis, as this plays out in the coming weeks and months, you're going to see some quality situations that help you understand what the highest probability of price action is going to be for that coming week. Mm-hmm. Then you're going to be in these, I mean, the charts are still messy, the ranges are still broad, but you're going to see a lot more consistency. I mean, just look at today, the price action today came down, bounced off the broad support level that occurred last week. And so like these multi-day ranges, multi-day support levels, multi-day resistance levels, technical analysis signals on daily and weekly charts, I think trading is going to come back more and more, because I think technical analysis is going to come back more and more in a world where both sides are arguing what's going to happen in September, what's going to happen in December. So technical analysis on daily charts, yeah, you give me setups, I could be convinced to get in for the first.
Well, and I'm loving the day trading environments. There's no question about it. The big picture fundamental argument about how to deal with your investment capital and long-term capital. I mean, I think that's the toughest timeline, quite frankly. It's basically, do you believe in getting in based on the narratives now, or do you wait for more clarity? In my opinion, and that clarity might take months. It might even take longer than that if you are the more prudent type of person. We'll deal with the investing narratives here in a bit. But Mark, day trading is still very clean right now, isn't it? I mean, that's probably the cleanest of all timeframes, is the short-term day trading time frame.
Yeah, and you're going to have some environments that are better than another. I think day traders need to set their expectations also on their targeting, because like we're coming off an environment with these huge, massive moves every day, just 1,000 points here, 1,000 points there, just these massive moves. I think because technical analysis is going to be a little more cohesive, like these targets, like targeting and taking profits in certain areas, being less greedy in these situations, because I still think people are programmed that like, oh my gosh, I can't miss out on this massive move to the downside or this massive move to the outside. I think the windows are going to be shorter burst. And so like going for massive home runs, yes, are you still going to have days like that? Sure. Especially if there's a catalyst of importance that day. You could definitely have that, but like setting your expectations and going for narrower targets, logical targets, hitting those, I think that is going to benefit day traders a lot. Realizing that the market's just not going to fall 1,400 points or rise 1,400 points. kind of like it's been. So greedy day traders, I think, are going to find a rude awakening coming up. Yes, you're still going to have your days, but logical places to take targets, old support areas, old resistance areas, major moving averages. I think those type of day traders that incorporate that into their decision-making process are going to be a lot better off in the coming months than the greedy go for the home run day trader.
Yeah, I'm with you 100%. I think that there's different techniques that I think could work right now. Obviously, if you're trailing a stop on some kind of scale out position, you can go for a bigger gain or a T2 gain. I know Coach Frank talks a lot about that, where if you have a set position in your day trade, you make a small profit, take some profit at T1, and then maybe trail stop and go for a little bit bigger gain on the other one. But you don't necessarily need to go for home runs in day trading. The market's already volatile enough. I mean, heck, you can catch huge ranges even on a day where the market doesn't feel like it's doing much. Like today, the market doesn't feel like it's a very volatile market, but we're looking at even right there, a 60-point range on the sell-off earlier in the morning. You're seeing 25, 50 points up and down. Volatility is still at an extreme high. In fact, Cody, go back to a daily chart, bring up the volatility index. Other things that are working right now, Mark, I know are like selling option premium. If you're an advanced trader and you know how to take advantage of high volatility environments, there's some crazy premiums in deep out of the money options. And that's one of the approaches you're taking right now. Is that right?
Yeah. As someone who doesn't think the world's going to end like you, like it's Timmy the Bear,
Jab there.
Oh, I'm so tired of Timmy the Bear. Like Timmy the Bear, although I am endlessly entertained by Timmy the Bear. You're Timmy I don't care. You are Timmy the Bear in 2029.
I mean, that's fine. There's nothing wrong with that. I have been the most bullish probably of any one of your internal circle of anybody for a long time. I am just a huge proponent in buying, owning, and investing in the stock market. It's one of my number one core arguments. So at some point, Timmy the Bear will be a hibernating bear, but I can be Timmy the Bear. I want the t-shirt still. I got to tell you, I still want the t-shirts made and the whole thing. There's no question. I'm just, when it comes to investing capital, Mark, I'm more cautious about the long-term capital than some are right now. I just don't see any reason to rush back into the market when we don't have clarity. Because I don't need to make money in the next 2 weeks. My investments are not designed to get me rich quick. They're designed to build wealth over the long term. I don't have any short-term need to say, I've got to go out and catch that 2%. I need more clarity before I move on the longer term.
What does clarity mean to you?
I need to know how the economic reaction is going to be from companies. When do they start hiring back? When do we stop getting closures of meat production plants? When do governments actually stop reacting to virus outbreaks the way they have? I don't have clarity on the economic condition. I probably will not have it for months, and that's even anecdotal stories. And I still think the number one story, by the way, is when do we get a vaccine? Until that, human behavior and consumer behavior is not going to come back the way that we're just all hoping it will. So yeah, Goldman Sachs raised their outlook this year to S&P 500 at 3,000 by the end of the year. So what? I mean, are we really in that kind of position where we got to catch that 8% potential upside with the potential for 30% downside? The reward to risk is completely off right now, Mark. What are we going to catch? Go back to the S&P for a minute here, Cody. Long-term perspective, okay? Is the S&P going to 4,000 this year? Do you think? Very unlikely, right? 3,400. I guess in the cards, 3,400 from here. I mean, we're at 2,700. That'd be a 700-point gain. 25% would be an incredible move to the upside. How much downside risk do we have if the economics of this play out in a very negative way? At least that?
In a very negative way one day.
Well, yeah. Isn't that always the investment thesis? Is one day? Because if you're talking about short-term price action, that is trading. We can label it investing all we want. It is not investing if it's based on short-term price action by bulls. Investing has to account for fundamentals. It has to. It has to account for long-term reward to risk relationships, right?
But one of the mega arguments of the bulls, and you're even seeing this become more like dystopian in its nature, is that fundamentals don't matter anymore.
I don't believe that.
I know I'm gonna set Timmy off,
Mm.
but like, and even the ones that are lamenting about a capital market takeover by the Fed, that fundamentals on some level don't matter anymore, because is anyone buying in the last couple of weeks because of fundamentals?
No, you're getting short covering rallies based on algorithms, and then short-term day traders are taking control. Long-term capital is not buying this up to hold for years. That's not what's happening in this recovery. This is not institutional money coming back in the market from cash to take a long-term investment position. These are bag holders that are riding it out and now letting the momentum get them back up to a new level. The inflows in the market are not strong right now, Mark. This is not some, investment thesis where Goldman and Bank of America had all this cash on hand, and now they're pushing it into the market. They're just holding it as they watched it ride down. They let their put up, just like Bill Ackman, they let put options then be converted to cash. They went back to their core holding position, and now they are hoping it goes back up. These aren't new buyers. I just don't believe that. I've been watching the narratives come out of Wall Street Mouse for my entire career. This is Wall Street pitching a narrative to get their core holdings back up to a level where then if they have to do something down the road, they can sell it for a reasonable loss and move on. Okay. This is not about new capital coming to the market in trillions of dollars to try to push the economy higher. That's crazy. There's no argument there. So yeah, if you tell me fundamentals don't matter, it's going to trigger me today. There's no doubt about that. I mean, I don't know. What do you think?
Well, I mean, how can you even, okay. The reason, the whole bullish argument is federal action, right? The whatever damage is done, it is offset to some degree by Federal Reserve policy, by the do whatever it takes attitude, by economic stimulus programs coming out of Congress, signed by the president. I mean, that's the whole bullish argument in a nutshell. You know, in that world where everything the bulls have to put their hopes on is absent fundamentals.
Correct.
It is completely absent fundamentals.
Shouldn't that scare the hell out of bulls, though? That they don't actually have a mathematical basis as to why they want to buy here. You know that the forward PE ratio right now is higher than it's been in a hell of a long time, period. I mean, you're literally buying more price for earnings at 2,700 than you were at 3,400 on the S&P. You want to know why? Because earnings projections have plummeted. Ford came out today, said they lost 600 million in the first quarter. Okay. Earnings season is starting right now. JP Morgan, who's got all this Fed balance sheet, the active window that they can access, they are raising buying requirements because they know they're going to have problems on defaults and people not paying their loans down the road. I'm seeing actions out of individual companies, Mark, that are still very concerning.
So let's talk about that JP Morgan thing, because I
bring up JPM if you can, Cody.
So I mean, what banks are doing is really interesting. So banks they raised their standards on home ownership, in which they'll borrow, because they don't want any part of this, risk adverse. They are like, and I thought these requirements were already in place, but obviously things lax over time, requiring a 700 credit score and 20% down, like no exceptions. Now, obviously, I thought that's what it was after post-financial crisis, but obviously things had laxed up. So they are, and they had temporarily last week suspended non-government guaranteed loans to businesses. You are seeing a trend in banks limiting risk that they're willing to take. Does the Fed back it? Let's do it. Otherwise, they are going to be very, very cautious heading into this macro situation. Now, obviously, if you're a homeowner and you don't fit those requirements, you're going to have a harder time getting a loan, which is going to cause home ownership to go down, right? Which is going to cause, I mean, that's just the reality of how these banks are going to approach it. If the Fed backs it, hey, free money for banks. But they're being very, very cautious because in this uncertain world, they're like, I don't want any part of risk.
Well, and frankly, people always hear these big numbers out of the Fed and the government and stimulus programs and all this kind of stuff. But when you pin that down mathematically, it's even like with oil last week, Mark, they hear these exorbitant numbers on the bull side of it. And they're like, oh yeah, well, the Fed's got all the money in the world. That's not true. I mean, that amount of money that they have printed and have been made available to those windows that are Fed backed guaranteed loans, that's one thing. But if lending stops in America the same way it did, that will affect these banks. There's no question about it. We got bank earnings this week. They're not supposed to be good. Doesn't mean the price will go down, by the way.
No, I like earnings this way. I like, where are you on banks?
I think we lost Tim there, Mark.
We lost Tim.
Ignore it.
Oh, nope, he's back.
Well, it's because Tim is going to say some bad things about banks, and we know that the Illuminati overlords will not allow that to happen. Listen,
fair enough.
We don't live in a capitalistic society. We live in a dystopian future, and you cannot say anything bad about banks in this new reality, Tim. So just be aware, you will get censored by Big Brother.
I love the banks. I love the banks. Keep us on YouTube. Stop pulling me down. Yeah, go ahead.
So no, I mean, but banks are an interesting play. I mean, like, I become more and more bullish the last couple of weeks. Now I'm really excited to see what the trading desk numbers do out of banks in these earnings reports. I think there is a chance that banks are going to be making more money than we think they're making. Now, the amount of loans they give out to homeowners, to businesses might go down, but that could easily be offset by the fees that they're collecting, the free no risk fees.
Sure.
From the Federal Reserve.
Well, and bring up XLF here, Cody, real quick, because we are going to get bank earnings this week. I mean, JP Morgan, Bank of America, Goldman Sachs, and Wells Fargo. The news out of JP Morgan doesn't have me as concerned about bank stock prices, Mark. I don't know how to wrap my head around how much money they're being given access to. You know what I mean? But, and I might be getting real bad Wi-Fi. You let me know if I cut out at all. But my concern with the JP Morgan news is that they're raising borrowing standards is actually a reflection of economic risk, not their own bank stock price risk.
Yes. No, I mean, why they're doing that is broad economic risk. Nobody is saying that I mean, I shouldn't say no. I'm sure there's some idiot on a blog out there saying it. None of the big analysts are saying that you're going to have a V-shaped economic recovery this year. Mm-hmm. That original term offset, that was initially when the Rona first broke out, that you would hear that. It's like,
are we all down with this? Are we all down with calling it the Rona?
Or calling it the Rona? No, it is no longer
absolutely the Rona.
It's no longer COVID-19. You got the Rona. No, it is. But when the Rona first broke out, you heard this economy is going to do a V-shaped recovery, and people have backed off that fairly quick in the big picture. So everybody knows that the economy isn't going to be running at full steam anytime soon. So the bullish argument isn't even one now of full recovery. It's the best bullish argument that I hear are one of stabilization. That stock prices, the economy as a whole, things might be ugly, but for stock prices, there's going to be so much stimulus put into the economy. There's going to be so much effort by the Fed to stabilize financial markets.
But let's split the bulls, okay? Because we can't just call them all bulls. You've got trader bulls and you've got investor bulls. The investor bullish argument is different than the trader bullish argument. Go back to the S&P for a minute. Let me ask you a very, very direct question on this. Would trader bulls give up their argument when they stop losing if they broke below trend lines and moving averages, if the technicals broke down?
Yeah, well, trader bulls are the group of individuals. I dislike them more than I dislike you. So, because trader bulls are so nice, they remind me of kids that I hear talking, because occasionally I'd go out and I'll hear people, these young kids talking about Netflix or this, and it's this, well, it's going to go up because, and that's the extent of their analysis. Their analysis is so absolutely naive. And remember, I'm in the moderate bullish camp, but their analysis is so naive. It's based on fear of missing out. It's based on, hey, the economy's great. It was great before. It'll be great after. And this thing's just going to skyrocket. It's like completely lacking any logical, cohesive argument. So the trader uber bulls, I mean, I just roll my eyes at them because it's like, yeah, can the market just go up till whatever? Sure.
Mm-hmm.
Yeah, anything can happen. Anything theoretically can happen. But their basis for it is this really naive, stocks just go up and this rally and the Rona's stupid and it's just a version of a cold and economy's going to be rip roaring by July. It's just this really lacking any reality argument.
Mm-hmm.
So trader bulls, once technicals give out, there could be a shock value, right? If trend lines break, if moving averages, if support, if you had 3 down days in the market, these type of things that will eventually happen, might not happen this week, but they're going to eventually happen. Trader bulls will get this. But I
Trader
thought
bulls are fair weather fans. They'll root for a football team when
I
they're
thought
winning.
it was easy. I mean, you have so many market participants that just want easy money, just want free money. And some of them right now feel like that this market is just that for them. It's, hey, I can just go buy and things are going to go up because look, price is cheaper.
I
this
think
is
we
dumb.
lost Cody's screen. Marky, can you share screens?
I'm reloading it. My thinkorswim
Cody's
is bugging out.
reloading it. No, so
Yeah,
trader,
y'all just keep talking about the market. I'll just reload the screen.
trader bulls, both not just on a technical, but if the market actually went down 3 days, their faith gets shooken real fast because it's not a real faith.
Right.
It's not a real argument. It's not a real thesis. It is this, hey, this is going to be free, easy money. And so I'm going to go buy Disney because, hey, Disney's cheaper. And if Disney goes down 3 days, all of a sudden, because it's not based in anything but this euphoric, I got to have money cope, they can get shook up real fast. So trader bulls
and investor bulls are not dependent on where the price is at any point in the next month. Investor bulls would have the same thesis if the S&P is at 2,700, 2,500, or 2,300, correct?
Well, they'd have the same thesis, but where I believe you separate the degrees in this is that I think investor bulls, Warren Buffett style, get a lot more excited at cheaper price levels.
Oh yeah, no, they even more excited at 2,300 because then they can justify the risk to reward based on economic future unknowns, right? Yeah. See, that's the problem with S&P 2,700 for an investor, Mark, and that's why I'm very much tap the brakes guy right now, because I'm like, holy cow, we're heading into an earnings season. We haven't even reopened the economy yet. We don't have a virus actual vaccine yet. Now, at some point, do I believe life is going to be great? I am more positive and optimistic than you could ever imagine about one. And by the way, I want to get back out
you
too.
You sound like Trump there.
No,
I don't, it's like what you believe and what you just said. I think there might be a disconnect. It sounds like you're giving me a Trump, everything's going to be good.
No,
speech.
dude, I'm in a really good mental place. I'm very excited about at some point getting life back to normal. I'm just not willing to start making calls about where the market's going based on when we're heading right into the face of so many unknown data points. And I'm hearing it out of both sides of Wall Street's mouth.
Dude,
I do not trust this rally.
All bad data points are buying opportunities. We've seen that in the jobless claims report for 3 straight weeks.
Mark, you might need to bring your screen up. I'm not reloading.
Yeah, let's have you screen share, Mark. Let's make it call an audible here, put a stop loss on it. Wi-Fi's been a tricky thing here, Cody. I've had 2 bars all morning, and I know I've been cutting in and out a little bit here as well. They're slowing us down. They want to get rid of the message here today, Mark. It's not fair.
You need to accept your evil Illuminati overlords. Just embrace the darkness, and they will give you good Wi-Fi.
Are you telling us to turn to the dark side?
Listen, I've
Mark's
embraced
a Sith Lord.
I no, I'm not. I just bow to my Sith Lords. That's what I do. I recognize their power, and I'm just saying, yes, sir. All right. I will live in your new world order. Track me, have a drone flying over my head, embrace lack of freedoms. I just want money. I'll take it. So yeah. I've embraced the Sith Lords.
Let's work through the markets real quick here. We're going to keep talking as we go. By the way, welcome out to our show as always. If you enjoy our show here at Tackle Trading, give me a thumbs up on the YouTube channel. You know, I put my radio voice on when I call for these, Mark, because it's, I guess, just the way that I've always done it. But I like those thumbs up. I like the analytics. And quite frankly, I like growing our community. I'm very proud of what we're doing over here at Tackle Trading. We're putting out content daily. Mark, your Sunday prep session last night was excellent. By the way, I did get a chance to watch the recording this morning. Your commodity report over the weekend was excellent as well. I appreciate that work you're doing on the weekends. You know, when you got to stay shut in, might as well do some webinars for our community, right?
No, and you'll know when this situation is really over when you stop seeing me every day. Because there is a direct correlation for 2+ years. The more chaotic it is, the more life shows. Like for a lot, we have a lot of new things. You might be like, I like this mark, I hate this mark, whatever. When things get good, you aren't going to see me again because I'll go into hibernation and I'll work on a book or I'll work on whatever. But
then you'll go to Walden's Pond. Then you'll actually take the time off, which is
I've actually been to Walden's Pond, where Walden wrote, and it is a very scenic. It's a great place to hang if you just want to like take in.
Dude, I would love it. In fact, I've got that book. I got the author wrong, by the way. It wasn't Emerson. In fact, it was Thoreau. Yep. Somebody, I think it was Mark Jones in the chat corrected me earlier. Appreciate that, Mark. Read a book right now as well, but let's talk markets here quick. S&P is breaking down here on the intraday. We're down about 2%. A 2% day these days is not that big a deal. Give me crude oil, if you will. Got to get your take on crude oil here, Mark, and talk about it. OPEC cut 9.7 million barrels a day in the OPEC plus conglomerate there with Russia and Saudi Arabia and some of these producers. The problem was Canada did not agree to anything and the US did not agree to anything. They just agreed to, in principle, economically, eventually they're going to have less output, right? The market did not love this. In fact, on Thursday, actually,
we are having Wi-Fi issues everywhere.
Seriously, Toss is acting
Listen,
up, Tim's out.
I guess the overlords didn't believe it. The sincerity in my voice
right now.
So
Tim's back again.
You cut out, my oil charts aren't working. Like, listen, overlords, I'm your servant. Give me some Wi-Fi.
The grid is shutting down. What is the market going to do when the grid shuts down?
Listen, that's
a bearish argument right there. If the grid shuts down,
society loses its internet. Yeah, you're gonna people are gonna go to war just because they're bored.
Man,
So
you take away everyone's ability to have internet and during social distancing. Oh, that's a bad thing.
Yeah.
How's your charts, Cody? Are you able to reload them again? Yeah.
I can't even get Toss to reopen.
Yeah, I'm having.
Is it a Toss issue or is it?
We have a couple people in chat saying they can't even log into Toss.
Mark, try FinViz. It might be a paper money issue on Toss. My Toss charts are loading in live right now. We could probably get charts on FinViz. I'm guessing we could try an outside source. Cody, does your FinViz load stuff?
Possibly. Let me see.
All right. Well, Cody is figuring that out. All right. So here's the big picture on oil, right? So Saudi Arabia and OPEC Plus agreed to $9.7 million barrel cut. Trump was out there this morning saying, no, they really are 20. Well, no. The cut was 9.7 million barrels a day. There was a little hold off by Mexico, who rumor has it is properly hedged in this market. So they're like, we don't need to cut. We're hedged, screw y'all, like we're making money on the downside because apparently Mexico learned how to properly diversify risk, which puts them in a much better position. But there was a cut, but most individuals out there that follow oil were like, that's a nice cut. Thank you for the cut. Still not enough. There's still potential downward pressure in oil. The supply demand ratio is out of whack. There's still this huge imbalance in oil. We still have oil storage issues that are coming into play. So there's still a lot of potential short-term downward pressure in oil. I still think, like many things, that there's an opportunity. I love $3 naked puts in May. Now, once again, do not, and I talked at length of this in the written portion of the commodities report, how I'm playing oil. Y'all can do whatever you want. You're all adults, can make your own decisions. How I'm playing oil is I have a total number of shares that I want to own. I'm willing to speculate a little bitty percentage of that, maybe 10, 15% at $3. I'm willing to maybe speculate a little bit of that if we get a bullish reversal signal and I do this quasi trade investing thing that Tim hates because he says that's just trading. No, it's adding trade risk to your investment thesis if I get bullish signals. But do be aware that there is downward potential pressure in oil because while the cut is nice, it doesn't do anything to solve the overall supply issue that we have.
Mm-hmm. Yeah, and actually, Cody, I was just thinking that as well. I think the trading view charts would be better than the FinViz charts because FinViz has all those annoying
I just went to
pop-ups.
tackle trading, and I'm using our charting system that we have on the website.
Perfect. Which is powered by TradingView here, and I like this choice here as well. I'm with you, Mark, and I understand. I completely understand. Your investment thesis is very, very smart. I do not have any criticism towards that approach at all. I think what it all comes down to out there, and you and I even agree on this, people have to understand what margin is versus assignment cost and risk. And if you're willing to do naked puts to take assignment, you can't use margin to do that. You have to have the cash on hand, correct?
For most areas of the market, for me personally, gold, silver, there are some equity areas such as REITs that I'm starting to look at that I'm willing to use margin. But as a whole, you don't want to misuse margin because while, hey, I might be a moderate bull, but I'm not going to I'm not going to take the risk to my portfolio account in case I'm wrong. Like that's just, once again, for me, that's reckless. Mm-hmm. And so individuals that are willing to roll the dice and use margin, well, your returns on any given month might be stronger, but there's a lot of moving parts in this market right now. There's plenty of money to be made in this market right now without being reckless.
Mm-hmm. So bring up USO if you can here, Cody. Let's talk oil while we're looking at it and talking about it right now. USO is now coming back down to some support levels. We talked about how that news last week was probably a sell the news, buy the rumor, sell the news type of situation. It's in the short term turned out to be that. Mark, where are the levels you're actually looking at here? We're at $5 on the USO, and it's been bouncing around back and forth right there. On crude light here, WTI crude, we're at $23 per barrel in the front month expiration. By the way, and I don't need an answer to this right now, but I'm still trying to wrap my head around the contango I'm seeing in the futures market, and it is one of the biggest gaps in contango that they've ever measured, right? At least in decades and decades and decades. Brent is at $31 a barrel, but USO kind of rides down here at that, and we'll use the ETFs for now, Cody, so you can keep it on USO. But USO rides down here at $4.95. Where are you willing to sell naked puts at? Is it 4? Is it 3? What levels are you looking at?
It's highly dilly through. You got to realize with USO, you have some contango risk because they use futures contracts that they roll over. And so there's a couple ways. And once again, this is a long-term thesis. Let's say I'm willing to own 3,000 shares total. All right. If I get a bullish trading signal, I might come in at $5, $4.75, $5.25 for 100 or 200 shares. Once again, having this big basket of shares that I'm willing to do. And if I get a rip situation where price of oil goes up dramatically on a news headline on this or that, and the fundamentals are still weak, well, then I'm going to take a quick profit on that and then look to do that again. And in the meantime, I'll look at those $3 naked puts when price gets down. And once again, start to nibble a smaller percentage of the overall shares and maybe sell a few more at the $2. What the annualized rates of return on these are pretty decent, but it's just way for me to maximize my whole portfolio account, because I'm not going to go 100% in equities, right? I'm not going to I'm just not going to put all my money out in equities. I'm going to have some in gold, a higher percentage than your average investor, like many people at Tackle Trading. I'm going to have a higher percentage in silver, because I love silver on a one-to-one basis versus equities. I think the argument is a no-brainer on silver, all things being equal, one-to-one equities versus silver. But on USO, I know there's some contango risk. I know there's some downward pressure because the oil storage situation. But long term, at these really depressed levels, I'm willing to start at. I just think there's a lot of ways to churn through oil in the next 6 months, 9 months, until this situation is fully resolved. And maybe it's 12 months, right? Maybe it's.
But here's the thing, and this is where Timmy the Bear is going to push back right now. Buying commodities based on your thesis is different than buying debt-driven companies that were financed by Wall Street, haven't turned a profit ever, and are still at a negative PE ratio. You even just said it yourself. It's a different argument for equities.
It's a weaker argument for equities compared to certain, for silver, for example, specifically, because silver has downside risk if the economy's sour for a long period of time.
Right.
We've seen that in every recessionary environment, but you also see silver bottom out usually more. And the one thing that silver doesn't have, so it still has all the downside risk. If things are crappy, there's downside risk. Your average equity on a 1-to-1 ratio doesn't have that precious metal kicker to it. I mean, we saw this in 2009. We saw this in 2010, in a period of like unprecedented involvement by the Fed in printing money and QE. Well, unprecedented today, right? It makes that look like child's play back in 2009 and 2010. We saw what can happen in a market with that precious metal kicker, where silver just went crazy during that time period. And so you have downside risk that is comparable perhaps, but you have this upside precious metal kicker to silver that your average equity doesn't have. My bullish argument on equities is more of stabilization. Eventually they can have, if you are patient and get in at some cheaper prices, have some of that same upside. But I like silver on a 1-to-1 basis a lot more than I do your average equity. So those naked puts on things like SLV, a higher percentage of my portfolio than maybe I normally would have. I mean, this is just where I'm at right now on silver.
Where are you selling those on SLV? Down at 10, 9?
No, you're not. I mean, no, because I want to maximize, if I were the annualized rate return of those, and I'm willing to take ownership starting at $12. You know, now I might not get that, right? Because I mean, the most frustrating thing, and I've shared this every time we have a pre-production meeting on a Monday, I'm always like, I'm so damn tired of my naked puts expiring. Like, I'm so damn tired of making successful trades, but not having these great opportunities that I'm waiting for. And so, you know,
that's
like,
a first world problem. I'm so sick of making money in the markets.
Oh, stay bored, Mark. Be comfortable with your
seriously, stay bored.
But that's the thing.
Talks about that.
But
and so, like, because there is downside pressure, you know, because I do, you know, generally buy the economy. We're not going to be where we were pre-Rona. That's just not going to happen. It's probably going to take us a long time to get to those levels. So there is definitely going to be an economic drag, and that drag could happen to silver. You know, I'm aware of that. So I'm not really a big fan of just buying things outright, you know, unless things are great, right? Unless, like, there are time periods like 2017 where global synchronized growth, tax cuts coming for businesses, everything just lined up to be like, where's the bearish argument? The bears didn't have one, and you know, or they had them. They were just so outlandish that they were nonsensical. I mean, there are time periods where just buying outright in my opinion, is a good play. You saw this in this absent vacuum news at the start of September last year when it was breaking out of resistance. I remember in our production meetings, I was like, yeah, even I would buy here. And we made a joke that if I was just willing to buy outright, damn, this market is going to probably explode, because there was an absence of negativity. There was hard to see any bearish argument come into play for months and months and months. And so there are times in life, times in investing, where just purchasing is the right play. That, yeah, there might be downside risk, but like the upside potential is so there that just entering in is the right decision. We got way too many unknowns in the Rona situation, way too many unknowns. And so selling naked puts at lower level is just how I'm approaching it right now.
Yeah. Give me a quick look at gold if you can here. Silver obviously is coming back up off of the bottom. Gold is now reaching new highs here in the short term. 1761 on the futures contract prices. Obviously, GLD is now breaking out. I mean, Mark, we have been bullish on gold throughout all of it, including the volatility, including the drop down. Last week's podcast, we had Pearl Lee on the podcast, and I really enjoyed that. We're going to be doing another podcast today with another student who actually made the Hall of Fame of trading over at Legacy Education, Larry Velasco. But Pearl said, gold's always got my back, and gold has had a lot of traders back for a long time. What's your read on gold here? We're breaking out. It's fundamentally sound. The technicals are great. I mean, it's probably the easiest argument in the markets, isn't it?
Well, and we talked about gold this weekend and the previous. I mean, we talk about gold a lot at Tackle Trading, right?
Mm-hmm.
And it's just, it comes down to like how you want to play it. Now, for me, and once again, naked puts expire constantly. Like for me, one of the things I feel safest about in investing right now is selling naked puts at much lower price levels on gold.
Mm-hmm.
Like it's one of those ways that I'm trying to maximize my margin, maximize my trading account to give me the total highest return. Because I'm not going to go push all my chips in equities. I'm not going to go push all my chips in gold. And so for available cash that I want to maximize, selling naked puts on gold trading instruments at lower level is one approach that I'm doing to do that. But that's where I feel safe. For an individual that's just got to have it, it's hard because like I've been right, but I've been wrong for 14 months, right? Mm-hmm. So for 14, it's longer than that now. When did I start yelling at people to buy gold? About 14, 15 months ago. It was like naked puts keep expiring worthless, right? Mm-hmm. But the better decision along the way has been to buy at certain levels, breakout levels, severe pullback level. The correct decision in hindsight has been to just purchase outright and screw it. Now, it goes against everything I believe as someone who doesn't like buying cyclical highs, but that's been the correct play for 14 months, might well be the correct play again today. And so it's one of those things that you're right, because like if every naked put you ever advocate or every naked put you ever do yourself on gold expires worthless, it's not that you're wrong, right? Because those are successful trades. But it hasn't been the optimal way to play it in 14 months because the fundamentals on gold have been so outstanding that being more aggressive has paid off time and time again. Now, I'm an old stubborn individual, and the higher price goes on commodities, I'm less likely to buy something outright, right? That's who I am. But for naked puts, I'm extremely comfortable at those lower levels. I mean, and we did the math on Friday. Like, I can't even remember where it was. Was it 135 or something? Like, and I sold a naked put on the show on Friday on GLD, but it was like an annualized rate of return on margin where you're getting like 21%. And I mean, that seems like a good place for me to dibble, right? Like if it feels like these good situations where I'm really comfortable with, because if gold were to come down to that price level, I'd be all about it. But buying the breakout, some individuals, they're more aggressive, and those individuals have been rewarded. The only thing I would caution on gold is that, yes, I understand there's a segment of individuals who believe that the dollar is going to be worthless one day and gold's where to be. There is going to become a point in the future where the fear of the Rona dies out. where the Fed pulls back on their spending. And if the death of the dollar hasn't happened and you get stuck at high levels, I mean, you could have a situation that occurred, 2010, 2011, where gold peaked out and it was downhill from there. Like, that's just the reality of it. In the short term, I don't know where the limit is, though, because the fundamentals, the printing money, short term, I mean, the moon right now?
Dude, it's pretty incredible. I mean, thinking about an upside target, I can't even imagine why you would target gold.
That's what I talk about. Like with individuals this weekend with pro members, I was just like, if you do sell covered calls, it might be smart not to do your standard 0.4 delta. Like if you're going to sell covered calls, like,
oh, I wouldn't cap it. I mean, at the best, maybe an uncovered lid there a little bit. Like if you have 1,000 shares of GLD, maybe you do 5 contracts up at the 20 delta or something.
Yeah,
to get
20,
a little
50,
cash flow.
I mean, you still can
something
get a
like
little
that.
cash flow.
Yeah.
But like, I mean, because there are upside things. So it's just how do you play this really good situation?
Well, you don't want to always cover a position. I think that's very important. If you're an investor out there running your long-term capital, you're like, okay, covered calls are a part of my cash flow. Mark, you don't cover it every month, you know?
Yeah, because one thing you need to know about Timmy the Bear is that when Timmy the Bear isn't bearish, he's like, there's no limit. This thing's going to the moon. Like Tim has 2 extremes, Timmy the Bear and Timmy the FOMO driven. There's no limits to the amount of money I can make on this.
Hey, I'm a momentum trader, and there's no question about it.
No,
and I
you're
still
a
believe
FOMO trader.
I don't have FOMO. If I had FOMO, I'd be in the market right now.
You have fear of missing out huge profits. That's what you have fear of.
I like big profits. Nothing wrong with that. Don't apologize for making money, Mark. There's no question. In fact, I mean, trailing stops and going for big targets make a lot of sense with gold here, by the way. I mean, it's just like with this one. If you're locking in profits now, you probably were approaching it different than I was. That's the only thing I could say, right? Because with gold, you're looking for upside, you're looking for a hedge, you've got a strong fundamental position. I can't imagine why somebody sell their gold today. And that wouldn't make sense to me. Would it make any sense to you?
No, I mean, and once again, I'm usually extremely cautious is environments. Like, and if someone says, well, gold's going to 2,200, I'd be like, I can't say you're wrong, bro.
Maybe, yeah. Yeah, could.
Because there is just a lot of momentum here.
Yeah.
There's just a lot of fundamental strength. So.
Yeah. And I don't know how to get a lean hogs chart here on this one, but I do want to get your take on that. Smithfield Foods actually had to close one of their Sioux Falls plants. 300 people got coronavirus. Are you any bit concerned about supply chains disruptions if we have to close some of these facilities?
Like concerned in what way?
That it has an impact on markets and economics. Not as a human.
Well, no, because if you're not pricing in disruption to the coronavirus, once again, you fall under that really naive camp. Like moving forward, like you are going to see disruption.
You're going to see more of these headlines, right?
Yeah, you're going to see businesses have to close down. Like the headline Tim's referring to, there was a pork processing plant in South Dakota that's going to have to close for a few weeks. There was a meat processing plant in Colorado that's going to have to close because it's what we know about the coronavirus, right? Like knowing what the coronavirus is gives you insane power in your investing decisions, which is why I mean, it's just important to understand that it's not the flu. It's not some version of the cold. It's not a deep state conspiracy. It is a real nasty virus that when it gets in closed communities, just spreads like wildfire. So like when it gets into a closed door facility, a processing plant, a work environment, the chances of you getting it once there go up dramatically. And so we know this about the coronavirus. It has an insane transmittability factor. And so you're like, if you're not realizing that for the next year, until a vaccine is found, that you're going to see disruptions in the economy, well, that's just going to happen. Just, you can bank that. Like if those things are happening now when we're being ultra careful, what's going to happen when individuals maybe lax off a little bit? But no, that's just going to be the status quo moving forward, is that you're going to see these clusters. Like, I mean, we've seen that in South Korea, who's done a masterful job. they do a good job, and then a cluster would form, like in a call center, for example. A cluster would form, and all of a sudden there'd be 60, 70 new cases. You're going to see clusters form constantly over the next year. Even if as a society we get a reasonably broad hold of it, you're going to see clusters form in certain businesses, and they're going to have to shut down for a few weeks, test everyone, deep clean, and then open back up. So you're going to see, you're just going to have to deal in society. And this is best case scenario. This is if we get a hold of it and social distancing and we're responsible and we do our part as citizens. Even under best case scenario, you're going to have clusters form constantly here and there over the next year. So get used to those headlines.
Well, and here's our deep state, you know, the world is going to forever change story of the day here as well. Give me Apple Computer. Apple is partnering with Google to actually launch an app, Mark, that they do what's called contact tracking. Now, at this point, people have to opt into it. So you have to give up your civil liberties to be able to be tracked on this. But the idea is if you have your phone and somebody else who has coronavirus has their phone, the phones know when you're getting close to each other and will give you an alert that there's a coronavirus patient within 30 feet of you or 30 yards or whatever it is. The tech side of this stuff is pretty scary, isn't it?
Dude, I feel like there's something out of Aliens where they have the little trackers and they hear movement, and it's the beep, 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 beep when there's movement, and they start freaking out and everything. Yeah, like, can you imagine if everyone had that on their phone and they were out there and this beeps start going off?
This is like an episode of the Twilight Zone. I mean, this is like
you
stuff,
can see
right?
it, like, seriously, it's like, come on, picture how that would happen in real life, where you have your phone and all of a sudden you start hearing alerts, and then you hear somebody else's phone going off, and you hear somebody else's phone going off, and you're looking around, who is it? And people like start backing off, and like
Cody, are you downloading the app?
You gonna not even close. I still don't even have an Alexa or a Google Home or anything like that in my house. I'm not gonna let them track my phone.
Yeah, it's just crazy. I read that story.
Because let me ask you this: do you think that after people download that app, that they're immediately going to delete it from their phone, and if they don't delete it from their phone, that Google and Apple are going to stop tracking?
Here's the problem.
No.
In a worst case scenario, dystopian type thing, doesn't the state compel people and make them do it?
But if they don't compel people, think about this. The dangers of that app, I think, far outweigh, and I'm not even talking a privacy issue. I'm talking about, oh, my alert's not going off, that means it's safe. And so they relax behavior because they're not getting a beep. When people
imagine if people are in a bar and they're all having a good time, and then all of a sudden everyone's goes off at the same time because someone just walked in. How much chaos is going to be started in that bar instantly?
Don't yell Rona in a crowded theater. All right. You shouldn't do it. People are going to be hitting the door in a minute. Moving on to an interesting actual market.
But can't you see a South Park episode coming from this?
Oh, absolutely.
Right? Like you hear a beep and everyone's like, Rona!
Or they're gonna make Rona an actual like character, like they did with Man Bear Pig.
I am interested on South Park's take on the coronavirus.
I want to see some humor as well. Give me Disney if you quick. Bob Iger wants to take back the lead of Disney. He was going to take a step back and all that kind of stuff, and then the whole market shook, and his entire business that he's been building for a long time, Mark, is obviously looking very different. Bob Iger at the helm gives you a little bit more confidence in the stock, or do you care?
I don't care if it's Bob Iger or pick your religious figure coming down from on high to run the company. You know, until you get people back in Disney World, until you get people back in basketball where they can watch it on ESPN, until you get people doing all of the Disney things, like, it doesn't matter. Like, it's at the mercy of how society interact. It is at the mercy of consumer behavior, because even after they open up, will there be people flock to Disney? Hey, people that love Disneyland, they love Disneyland, right? And so, yeah, you're going to have people there, but at what levels? I mean, and this is the whole thrive versus survive argument. It's not that Disney won't have consumers. That's not even that they won't have a chunk of consumers. Where are they at pre-levels? Because that impacts their value. that impacts price that a reasonable, conscious, smart investor is willing to pay. Is it at 60%? Is it at 70%? Is it at 80%? I mean, this is the big, huge unknown of how consumers will react once lockdowns start to get lifted. And even then, even like, I think it was JP Morgan, let me see the thing, they were, it was Morgan Stanley was writing about how this all plays out, doing their best guess at different milestones and how the society opens out. It's like, even under best case scenarios, large public gatherings might be at a really small fraction of capacity. They were using examples like, if you opened up a basketball, is it 20% seating that's allowed? So yes, it's open, but these really small capacity numbers. How is Disneyland, either by state mandate or by company choice, what capacity numbers are they gonna? There are so many unknowns. Disney makes me mad because I've seen Disney so many times by these stupid 21-year-old investors who think that they're Warren Buffett because Disney's at 100 and 2 months ago it was 140. And it's like, isn't this a great thing? It's like, there are so many unknowns with certain stocks. Disney, perhaps as many as any other company. That's a lot of unknown to buy into, which is why one day, am I interested in Disney? Sure. Today, I'm just not, because the unknowns are massive in Disney. They're massive in Disney.
Here's the the daily update of winners and losers. You tell me if you see a theme. I'm going to go quickly through 6 stocks, Mark, and you tell me what the theme is. Ford Motor, give me this one here. We're going to go through the losers first. They lost $600 million. They're reporting in Q1. They're kind of projecting that earnings are going to be really tough. Dish Network, DISH. They're reevaluating their business, their core business, and they're also cutting some jobs here today. Caterpillar was downgraded at Bank of America, so there's some losers. Now here's some winners. Now FedEx.
Oh, the Caterpillar run-up was the stupidest thing I've seen in this entire market.
Correct. I mean, well, one of them. The Boeing bounce back on the.
But Caterpillar, where there's this like, oh, we're just going to get to price levels that basically we've been at before. Where Caterpillar is like the amount of foreign sales they make. It was like literally, I mean, on my Excel spreadsheet this weekend, I had them number 1 on sell to rip scenarios because it's just like, from a reality standpoint.
I got to make a point here. That's something everybody in Team Tackle should do. You need to have a list of bearish stocks in case the market turns down, right, Mark? You have to be able to trade it down if the price action goes there. Caterpillar was on our sell the rip list. So many internal coaches at Tackle Trading saw a lot of the same thing. I mean, this was a rally back into old support. Now we're pivoting down. I mean, you got to learn to trade both sides of this market because we don't know the outcome, correct? I mean, that's true in any market.
I think there's going to be, like, listen, my best guess moving forward the next 3 months, you see this really wide range develop. Now, I don't know if it's 2,400. I don't know exactly where the upper and lower ends are, right? But give or take 150 points or so, somewhere between that 2,400 and 3,000 level, just because nothing's going to be settled. And so you're going to have days and momentum and technical shifts, and people take profit, and it's going to go back and forth. Like, if you can learn, I mean, this could be one of the greatest trading environments moving forward, as far as just amazing situations, buying low, selling high, shorting high, like, just if that trading range develops.
I agree.
And I think that trading range over at least a 2-month period, maybe even a 3-month period, is the highest likely outcome right now, because nothing's going to be settled. You guys, you, Timmy the Bear, and the Uber Bulls, you guys are all debating things that will happen in October, next January, December. It's not going to be settled in the next couple months. All you're doing is going to get information, and you're both going to say it's either really important or irrelevant, but it's not going to settle anything. And so when things go higher, even on the bullish side, I'm like, I'm just not interested. Just not interested. But when they go lower, I'm going to be more excited. But the price movement on Caterpillar was nonsensical the last couple of weeks.
Completely nonsensical. Give me a couple more here. FedEx, real quick, Cody. The shipping giant upgraded at Bank of America.
Yeah, I saw that.
obviously, I mean, shippers are an interesting play here. You know, they were kind of beaten down very, very hard. In fact, some of them were even down for a very long time. Amazon got rid of one of their, I guess, contractors they use for shipping. FedEx actually benefited a little bit from that. Interesting chart, in my opinion. Amazon is hiring another 75,000 workers, kind of in line with this. There's going to be winners and losers in all of these economic storylines. There's no question about it. Amazon, that break at 2000 was clean. You know, we talked about it, we saw it, we identified it. Amazon has been one of the lone bright spots in a market. It makes this sector really hard to rank, Mark, because Amazon is such a heavily weighted component of it. This is one of those futuristic kind of things. I mean, but Amazon bullish, no question here. Is it still a buy in your opinion? Do you see anything in there that gets you interested? I mean, how would you approach a company like this?
And it is hard because I can't exactly sell naked puts. I mean, I don't exactly have the ability because I don't like owning more than 2 or 3% of a stock, 5% tops. Naked put on Amazon, that takes, that's just beyond my price level right now, in order to do any cost averaging strategy down. And so like, you only can acquire shares on a limited basis. Some individuals, like this guy the other day I was talking to, he's like, he bought 2 shares of Amazon because that fit his portfolio thing. Amazon is obviously in a situation, because of its nature long term. I mean, Amazon was already taking over the world, right? Like they're going to be plenty busy regardless of the coronavirus situation. Might pick up market share, might be busier than ever. I mean, it's hard to argue what was that total number of people that they were hiring?
Well, they hired 75. They announced they're hiring 75,000 more in the next week or two. They're looking for more people.
You ain't hiring 75,000 people if you are not being like, holy cow, we are just doing a lot less business. Let's go hire 75,000 people. I mean, that's a big number even for Amazon. That is, in a world where we have very little data, that says that, hey, they're doing a lot of business.
Well, and that's in addition to the hundreds of thousands I think they hired in March too. So this company obviously has a ton of demand right now. Give me a peek at Gilead. Remdesivir, I believe, Cody. I have a hard time announcing these medicines' names. Do you know anything about this one from Gilead, the trial they've been going through?
I have not been looking at it, no.
This is an interesting one. I read that actually they did a short patient trial in Brazil, or I think it was Brazil. I'd have to double check that. Don't quote me on that. But out of the small clinical trial, they actually said that 70% of the people they put on this drug needed less oxygen. Now, these were people in critical condition, Cody. So they were already on ventilators. They were already in the ICU, things like that. So it's more of a treatment drug. I love reading stories like this. I'm excited by what I'm seeing from the science community and from the manufacturing community. People giving responses that are positive, the science going after not only remedies, but also, they're working on vaccine trials. But it just takes some time. I mean, these trials, this also gave me an idea. They actually stopped the trial because they got enough data. Now they're going to do a second trial down the road. But encouraging news, right, Cody?
Absolutely. And that was something that, I mean, I talked about this way back on the podcast almost 2-3 months ago when we did that podcast, that when you do have the scientific community wake up and they start coming together and grabbing information and sharing information, and then the private sector is part of that scientific community, a lot of private research labs and some of these larger companies, when that starts coming out, things can move pretty quickly in the field. And that's quite amazing to talk about the U.S. innovation when it comes to that point.
Give me a look at Jets, Jets, Mark, and I could have seen this one coming. I just didn't know if it was going to come this quick. The airline industry, and by the way, when I talk about airlines, I'm not talking about the people who run any company, by the way. If I'm critical of a company, it's usually on a corporate level or a macro level. If you are working as a stewardess or a pilot right now, I commend you and thank you for trying to keep that engine running. There's no question about it. But the airlines today, Mark, and actually over the weekend, they started getting chatter out of their representatives that they don't want to repay these government loans. Mnuchin was saying, well, listen, this is going to be a short-term bridge loan, low interest. We're going to have some of the money as grants, but some of the money will have to be repaid over 10 years. And Mark, they're already pushing back. They're saying, well, if we have to repay it, we don't want it, or we want to renegotiate this. Or
I know, because we live in a world where the person on this corner that has the sign up that says, have any change, could use some help. They get to dictate the terms. You give them a $5 bill, they're like, I was really looking for a 10.
Yep.
And that's the
Give them a
corporate
hamburger.
advice.
They're like, nah, man, I was more thinking like a steak. Can we do some Outback takeout? Right.
Yeah, no, it is the airlines for a decade. If a business can't survive for a short period of time, that's one thing. When a business was fiscally irresponsible, engaged in financial engineering, stock buybacks to artificially drive up their price, extravagant executive bonuses.
Flight attendant Marie, hold on. Marie, who used to work in the airline industry, is now slapping me around a little bit. She is one of my mentor students. I dearly have, I believe her trust and love. Marie, I apologize if I said stewardess and that offended you.
God, his little heart just took it. He's like, oh my God, I insulted someone. No, I'm pretty sure she's picking on you for the simple fact that you're so PC that you.
I know she's picking on me.
I'm surprised you even used the word stewardess.
It's because you hate women, Tim.
No. I have a deep love for all people. There's no question about it. Marie, my heart goes out to you. It is open to you today. Thanks for teasing me and picking on me. And yes, Cody, it's easy to trigger a liberal. There's no doubt about it.
But
Anyway,
it's a big deal. If these are bridge loans versus free money, that goes a long way in how you evaluate a company's health if you're willing to do it. I think the airlines, for whatever reason, have preferential treatment. Let's call it what it is. Big business has preferential treatment over your average small business. That's the crux.
Yeah. As a small business guy, you don't get to come back to the government and say, hey, listen, I know you told me 2.5 months of payroll or $1,200 a month, but you know what? I need like $3,000 a month. There's no negotiation on that level, is there? But big business.
We live in a corrupt system. Now, that's just what it is. You want to do something about it, vote accordingly. If you don't care about it, vote accordingly. But your vote matters. It's, like, if you want to support this type of policy, this crony capitalism in society, that's up to you. Like, as an investor, I'm just assuming that it keeps on going.
Yeah.
Because when I'm making investing decisions, I don't get the luxury of political bias. I have to analyze what is. And I think there's an excellent chance that they get what they want. And these they don't become bridge loans. They're just, here's some money. Why?
I agree.
Because that's the way it works in America. Maybe it shouldn't, but that's the way things are.
I have been really happy to see in some of these measures, and I really commend both political parties for getting that bill passed a couple of weeks ago. I know there was a lot of chatter, but Mark, including independent contractors and gig workers in this for the first time, I thought was very smart, very needed, and an update to modern economics. And I know most of the money went to these jets and corporate airlines and all that kind of stuff, but I know real life people who are out of work that were contractors that are saying, hey, listen, if I didn't have this, I'd be screwed, So I am appreciative that politicians got some of that stuff moving forward. And it does go to show that they have responded in many, many positive ways. Now, do I like the fact that they've put so much of this money to front load to corporations that have used their money for stock buybacks for years? No, I don't. And I do believe anybody who does take money should be outlawed from doing a stock buyback until they've paid the money back. That's my personal perspective. That's my opinion. I doubt you're going to change that one because it's just it's how I feel about it. You take the government's money, you take the public's money to go and fix your business. Don't manipulate your stock price until you're whole. That's it. I mean, that's my take on it. A couple more companies I do want to look at here. Boeing. They are calling back some of their workers in some of the defense areas, national security areas of their company. Mark says they might have a limited reopening of some of their factories in Washington, about 2,500 workers, nowhere near, obviously, all of their factories, but kind of, good anecdotal signs. Some areas of the economy are going to reopen faster than others, don't you think? I mean, factories that build defense products, those type of things, we're going to open those up. Food, dispensaries and whatnot. I mean, we're going to keep those places open, don't you think?
I mean, you're going to see a rolling out because, right, this is going to be the fight moving forward where some industries start to get back to work more or rolling economic, getting the economy back to some semblance of full force. It's just going to be a slow, tedious process that is going to be interrupted from time to time on clusters form where certain industries are going to have to shut down. You know, the nightmare scenario, right, is, that second peak where it becomes overwhelmed. All of this, God, there's so many ways this can play out, but the most likely way is that the most likely scenario for the next 9-12 months is we slowly roll out, we get back to a level. Mass gatherings are really going to be difficult, but you're going to see this really uneasy consumer behavior where people are saving a little bit more. There's a lot more people unemployed than even bullish optimists might expect. It's going to be just this sludgy situation where the federal government and the Fed's doing everything they can, but real life on the ground employment, real life on the ground production is just in this sludgy state of being where it's trying to ramp up to full production, trying to ramp up to where we were with an occasional hiccup here or there, with the big wild card of does the virus get a second peak that is, which Timmy the Bear would say, yeah, we can't do anything because that second peak might happen. That second peak is going to happen at some point. It's just how bad is it?
Sure.
It's
as
really
long as
hard
that
to
second
avoid
peak is more of a bearish retracement to the first peak, then we're good.
And that is a huge unknown at this point. That's a huge unknown. But we're going to have, like, best case scenario, this sludgy environment moving forward where things slowly open up, but with the exception of the big mass gathering things, and I don't know how we're going to handle that as a society. It's really hard to see 20,000 people in the Jazz Arena anytime soon.
It is. And I know a lot of sports. I actually read a really interesting article. I think it was on ESPN, might have been Sports Illustrated, but I'd have to find it, where they're talking about the complexity of, like, having these limited reopenings. Like, if you put people down, all the baseball teams in Arizona, you just play down there in the, kind of like the preseason stuff. It's not that easy. You have to have trainers. Those trainers need to be quarantined from their family. You have to have daily testing. There's all kinds of complexity to that as well. Sports is going to be a tricky one. And I know it is one of our opiates of, in modern life. There's no question. I miss my sports too. Don't get me wrong.
I was talking with a friend of mine who works with Texas A&M Athletics, and he was talking about the spring training of some of the college players. And they were like, we're going to know if y'all aren't training on your own, because they're not together. So they basically sent all the players home with training regimens that they need to be doing on their own. Can you imagine what football is going to be like come the fall, to be able to see which teams, which players for all teams, including, college and the NFL, that aren't taking their spring training seriously? They're just at home. This could be a pretty sad season for some teams.
Yeah. Some people coming in out of shape. I would believe it.
I mean, of course, they're still in better shape than us, but they're not going to be at that peak point unless they actually rigorously worked. And I don't know about you, but I don't work as hard when I'm working out unless I'm there with someone pushing me.
Home regiments are tough, man. I mean, I got to tell you, I've always had a hard time working out at home. If people have tips on some simple things people can do to stay active at home without being able to get to the gym, send them to me. Tim at Tackle Trading. I would love to hear some. I know we got some trainers out there that work in physical fitness and whatnot. Real quick, 2 ones for the Bulls. I'll throw you a bone here, Mark, although these are probably not 2 stocks you would be interested in. But Zoom, we nailed this one last week. Man, boom, pullback, pivot, trigger. Isn't that beautiful? That's beautiful. Netflix about to break out, guys. In fact, you could even argue it might be breaking out here right now. In fact, give me a peek at Netflix. Look at that momentum. Ding, 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 ding.
We are all just part of the Tiger King documentary now.
Who's your favorite character on Tiger King, Cody? Have you seen it?
I have not.
Smart. Don't see it.
I've always been one when there's a mass hysteria about something, I stay away until it dies down, and then I'll look back on it later. Tiger King's in that category right now.
You're such an old man. Seriously, you're like 90. Dude, you better hope you're not getting the coronavirus because you're in the target demographics of high mortality.
Too soon. Too soon for jokes about the Rona. Netflix here breaking out, looking great. Obviously, Tiger King. Mark, who was your favorite character on Tiger King?
Oh my goodness. I don't know how you get away from Joe himself, like
He's compelling. He's interesting. I
now
still don't
favorite
like him.
doesn't mean the most likable.
No, I
Favorite
still don't
doesn't
like
mean
him.
that's you're rooting for, but
Yeah.
like that whole world, like
What a
that whole
weird show.
subculture, like it's like, oh my gosh, this is real. This
If
subcultures are fascinating.
if you've not seen it, it is a very interesting show. If a lot of people probably would hate it, by the way. There is a lot of implied
Well, I don't care.
questionable behavior.
Well,
I'll say
all you
that.
people that say you hate it, that's such a lie, because you would say you would hate car crashes, but you still
It is a car
rubberneck
crash.
and look at the car crash because you want to see what happened.
It is
So
a
you can
social
say
car
you
crash.
hate it, but it is hard to turn away from a car crash.
Yeah.
That's why one car can crash and the whole freeway shuts down because we all got to look.
Yeah.
That's the Tiger King.
Guys, we got to wrap this one here today. Cody's got a meeting he does on Mondays, actually doing prep for his management team. We've got our podcast to record today. We're actually going to be releasing a podcast with one of the greats over at Tackle Trading, one of our students, somebody we're very proud of, Larry Velasco. Larry's story is really compelling, Mark. Originally from Venezuela, came to the States, worked his butt off in education, and his commitment to his life's work and things like that has produced a lot of fruit from his labor. And he learned to trade here in the last few years and actually did well enough at it to make the Hall of Fame of trading over at Legacy Education. Very cool. We sat down with Larry and recorded that. We're going to record the rest of it and release that tonight.
If Noah's your favorite, if Tyler's your favorite, if Gino's your favorite, if Greg Holmes your favorite, Emily your favorite, we got a whole bunch of everything. And if I'm your favorite, then I feel sorry for you, because there's lots better human beings than me. But
no, I guarantee you're on a lot of people's favorite list. Guys, great job today, Cody. Appreciate you. I know we had some Wi-Fi issues, but it seems like that's the world in these new Rona times, right? We're having Wi-Fi skips. We'll be back tomorrow at the same time, same station. We'll see everybody then. We're out.